I got a 2019 Mini Cooper. Low miles. 60,000 miles. No, I don't want a Mini Cooper. Well, your income is mini. And that right there is the whole problem. Everybody wants the BMW. Everybody wants the Mercedes. Everybody wants the Lexus. But the income, the credit score, and the down payment are all saying something completely different. This is how people get trapped in bad car loans. They don't shop based on what they can afford. They shop based on what they want to look like they can afford. And that is a very expensive difference. Let me break this down. She wants a BMW X7. The car is around $41,000. She wants to pay no more than $500 a month. She has around $1,500 down. And her credit score is in the mid 500s. So basically, her credit score is the same number as the payment she wants. And somehow, she thinks that is not bad. That is not confidence. That is math being ignored in real time. Because with a low credit score, low down payment, and a luxury SUV, the lender is not looking at you like a buyer. The lender is looking at you like a risk. And when the bank sees risk, they don't just say no. Sometimes they say yes in the most painful way possible. They give you a higher interest rate. They ask for more money down. They stretch the term. They add conditions. Or they approve you for a car you don't even want. That is how someone walks in asking for a BMW and walks out being offered a Mini Cooper. Not because the dealer hates you, because the numbers are telling the truth. Now here's where people get mad. They say, "You're not trying to help me." No, sometimes the person telling you no is the only person helping you. Because the dealership that says yes to everything is not always helping you. Sometimes they are just finding a bank willing to punish you every month. And a bad approval can be worse than a denial. Because at least a denial saves you from the payment. A bad approval gives you the keys and lets the damage happen later. Now let's talk about the income. She makes around $12.50 an hour. Full-time, that's roughly around $2,000 a month before life starts charging rent. And she wants a $40,000 luxury SUV. That is not transportation. That is a financial trap with heated seats. And then she says she does overtime. But listen carefully. You do not budget a car payment on overtime. Overtime is not guaranteed. A bonus is not guaranteed. Side money is not guaranteed. The lender may count income a certain way, but your real life does not care about the approval. Your real life cares about what happens when the overtime disappears. Because the car payment does not disappear. The insurance does not disappear. The gas does not disappear. The maintenance does not disappear. The BMW repair bill definitely does not disappear. So if your base income cannot handle the car, you cannot afford the car. That is the part people skip. They calculate the payment on their best month. But the car payment comes due even in your worst month. And this is why credit matters so much. Because if her credit score was strong, she might have more options. Better rate, better terms, lower payment, less money down, maybe even approval on a better vehicle. But with a 490, 525, or mid 500 score, the bank is not giving her luxury treatment. The bank is giving her risk-based pricing. And risk-based pricing is expensive. This is where credit repair comes in. Before you walk into a dealership asking for a BMW, before you apply for a Mercedes, before you let 5 different dealers run your credit, you need to know what is sitting on your credit report. Because that credit score did not just appear for no reason. Something is pulling it down. Collections, charge-offs, late payments, repos, hard inquiries, high credit card balances, old addresses attached to bad accounts, wrong personal information, duplicate negative accounts, accounts reporting with wrong dates, balances that are not updating correctly. And all of that can make the lender look at you differently. So the first move is not the BMW dealership. The first move is your credit report. Pull Experian, pull TransUnion, pull Equifax. Look at all three, because sometimes one bureau looks better than the other two. And auto lenders may pull a bureau that shows the worst version of your file. That is how someone thinks they have mid-5 credit, but the bank sees 490. And now the whole deal changes. So if you have collections, get them reviewed. If they are inaccurate, outdated, duplicated, unverifiable, or not yours, work on getting them removed. If you have charge-offs, check the balance, dates, status, payment history, and reporting details. If something is wrong, challenge it. If you have hard inquiries you did not authorize, work on removing them. If late payments are reporting incorrectly, review them. If your credit cards are maxed out, pay them down before applying. Because every negative item is another reason for the bank to charge you more. And here is the surprising part. A lot of people think bad credit only affects approval. No, bad credit affects the price of the approval. Two people can walk into the same dealership, look at the same car, same price, same year, same mileage, but one person gets a normal payment. The other person gets a payment that feels like rent. Same car, different credit file, different outcome. That is why fixing your credit before buying a car is not just about getting approved. It is about not getting trapped. Now let's talk about the Mini Cooper. She did not want the Mini Cooper. And honestly, maybe I would not want it either. But if your income is $12, $50 an hour, and your score is in the 500s, and your down payment is $5,100, you do not get to act offended when the lender matches the car to your file. Because the bank is not looking at your dream board. The bank is looking at your risk. And if the risk is high, they are going to lower the car, raise the interest, or ask for a cosigner. That is why the salesman says, you need a cosigner. Now let me be very clear. Needing a cosigner usually means the numbers do not work. It means the bank looked at your income, credit, and debt and decided they do not trust you by yourself. So now you are asking somebody else to put their credit on the line for your car. And if you miss the payment, their credit gets hit too. If the car gets repossessed, their credit gets damaged too. If you stop paying, they are responsible too. That is not a small favor. That is asking someone to carry your financial risk. And if your credit is already damaged, the goal should not be finding someone to cosign. The goal should be fixing why you need a cosigner in the first place. Because if your report has collections, charge-offs, late payments, repos, and hard inquiries, a cosigner does not fix the problem. It just helps you drag someone else into it. Now here is the fake approval trap. She says she has an approval somewhere else, but she cannot remember the place. That is usually not an approval. That is hope wearing a dealership badge. A real approval has numbers: interest rate, term, down payment, vehicle price, monthly payment, lender conditions. If someone says, you're approved, but they have not explained the real numbers, you are not approved. You are being warmed up. Because some places will say anything to get you in the door. Then once you are emotionally attached to the car, the real terms show up. Higher down payment, higher payment, longer loan, worse car, more fees. And now you are sitting there thinking, well, I already came this far. That is how people sign bad contracts. Not because the numbers make sense, because they are tired, embarrassed, excited, and want the deal to be over. So here is the rule. Do not chase approvals. Prepare for approvals. There is a difference. Chasing approvals is when your credit is bad, your report is messy, your cards are maxed out, and you keep applying everywhere, hoping someone says yes. Preparing for approvals is when you clean your report first, remove inaccurate negatives, lower your balances, save money down, and then apply when your file is stronger. That is how you walk in with leverage. Now let's talk about the single mom situation. Her car is totaled. She already has a car loan. She was behind on her payment. Her credit is around 560. no down payment, single income, 4 kids, and she needs another vehicle. Now, I understand that situation is stressful. Sometimes people need transportation to survive, they need to get to work, they need to take care of their kids, they need to keep life moving. But this is also where people make the most dangerous decisions, because desperation makes bad loans look normal. When you are desperate, a high interest rate looks like help. A bad approval looks like a blessing. A $2,500 down payment you do not have sounds like almost there. A co-signer starts looking like the only way out. But sometimes more debt is not help. Sometimes it is just the next problem. That is why, if your credit is already damaged, you need to stop and look at the full picture. What is hurting the score? Are there collections that can be removed? Are there charge-offs reporting incorrectly? Are there hard inquiries stacked from dealership applications? Are there late payments that need to be reviewed? Are your credit cards too high? Is your debt-to-income ratio already too heavy? Because if the report is not fixed, every new approval is going to cost more. And that cost does not just hit once. It hits every month, for years. Now let's talk about bankruptcy. Some people online act like bankruptcy is a cheat code. They say, I ran up debt, filed bankruptcy, and now I'm fine. That is not financial advice. That is dangerous. Bankruptcy is serious. And taking on debt with the plan to file bankruptcy is not some smart loophole. That can create real legal problems. Filing bankruptcy because life went wrong is one thing. Borrowing money with no intention to pay it back is something completely different. And even when bankruptcy is legal and necessary, it can still affect your credit file, your approvals, your interest rates, and your options for years. So do not build your financial plan around destroying your credit and hoping it works out later. That is not a strategy. That is a confession waiting for consequences. Now let's talk about bi-weekly payments. Some people think paying every 2 weeks is greedy, but in many cases, bi-weekly payments can actually help you pay the loan down faster. Because instead of 12 full monthly payments a year, you can end up making the equivalent of 13. That extra principal can reduce interest and shorten the loan. But here's the problem. People don't understand the loan before they sign it. They only understand the payment. They hear 45 days until first payment and think it is a blessing. But usually that just means interest is still building while they feel safe. They add gap, they add warranty, they add insurance, they add gas, and suddenly the $468 payment becomes $750 or $1,000 a month to drive. That is not a small car payment. That is a lifestyle decision. And if you are already door dashing to buy groceries 3 days after getting the car was too expensive. I do not care how good it looks. I do not care how good it is on gas. I do not care how excited you are leaving the dealership. Month 3 is coming. And month 3 does not care about excitement. Month 3 cares about the payment. Now let's bring this back to credit repair. If you have bad credit and you want a car, here is the process. Step 1. Stop applying everywhere. Every dealership application can create more hard inquiries, and if your file already looks weak, more inquiries can make it look worse. Step 2. Pull all 3 credit reports. Experian, TransUnion, Equifax, do not guess. Know exactly what is reporting. Step 3. Find the negative items. Collections, charge-offs, late payments, repos, hard inquiries, wrong balances, duplicate accounts, old personal information. Step 4. Work on removing or correcting anything inaccurate, outdated, duplicated, unverifiable, or unauthorized. This is where credit repair can help, because if those items come off, your score may improve and your approval options may change. Step 5. Lower your credit card utilization. Do not max out credit cards for a down payment. That can drop your score and make the approval worse. Step 6. Save real money down, not borrowed money, not a maxed out credit card, not a payday loan, real money. because money down gives you options. Step 7. Then shop for the car, not before, because the dealership can only work with the credit file you bring them. If you bring them a damaged file, you get damaged terms. But if you clean the file first, you may have a better chance at a better approval. And that can mean a lower rate, lower payment, better vehicle options, and less money wasted. So the lesson is simple. Do not buy a BMW on Mini Cooper income. Do not count overtime like guaranteed money. Do not let fake approvals make you ignore math. Do not use a cosigner to avoid fixing your own credit. Do not treat bankruptcy like a loophole. Do not sign a car loan just because the first payment is 45 days away. And do not keep applying with a credit report full of collections, charge-offs, late payments, and hard inquiries. Fix the credit first, then shop for the car, because the goal is not just to get approved. The goal is to get approved without turning transportation into monthly punishment. And if your credit report is the reason you keep getting denied, or the reason your payments keep coming back crazy, then that is not where you ignore the problem. That is where you fix it before the next dealership fixes it for you in the most expensive way possible.